Alright folks, Styles here, Seasonal Swing Trader, and this is your free video update for the week of August 17th, 2020. Hope everybody's having a great week. In our Smart Seasonal Scanner, the Smart Stock Scanner flagged two potential trade ideas in the famous Chicago Futures and Options Exchanges. First is the CME group, where I used to work. And we also are looking at CBOE, the Chicago Board Options Exchange. In our scanner flagged two potential trades, both bullish in CME and CBOE. So what we wanted to do is take a closer look and decide which one of the two do we want to participate in, or do we want to perhaps take a position in both. Now, we did flag one of these last week, and then while the other one came up this week. And you'll notice that CME was actually had a start date of around Aug 4, and then a new bullish setup that starts on around Aug 25. Now the CBOE trade called for a long around July 31, but both CME and CBOE trades end around the 9/21 mark, as you can see right here. And then we also have a short-term bearish scan that popped up, lower probability trade that occurs on around mid-September. So what we want to do is take a look at both of these issues a little bit more closely. You can see we're right here. We have a batting average above 85%, 88, 94, and then 89% respectively in CME and CBOE. A lot of years of data here, 8, 17, and 9. Average profit in dollars is hovering around the $300 to $400 mark, with CBOE actually averaging a larger gain in dollar terms as well as percent terms. If we look at the chart, though, we always want to have extra confirmation by looking at the chart, and this is what I had flagged out to our members early this week. So we're basically looking for a breakout here of this trend line. We came down here into multi-week support or price structure down here into this 160, 165 area. Notice that it was also a direct ping off a 50% retracement from this swing high down to that swing low. So we're getting a simultaneous break, our bounce of the 50 and break of the longer term trend line. And now we're trading in line with seasonals, with first targets up here at 190 and then up here at the 195 to $200 area. We look at CBOE for perspective. We can go to the CBOE chart, and from a price comparison, we're pretty much looking at a very similar picture. Price had bounced up here in mid-June. It's come back down a little bit further, retraced a little bit further from its swing high to its March swing low, came all the way down to the 618, found support, now broke out of channel resistance and this longer term trend line resistance. So we're out of the way of earnings, don't have to worry about that. We went ahead and got long CBOE. It's a little bit cheaper, and then if we look at a comparison between the two, so here we are at 173, 175 on CME. If we had an overlay here and look at CBOE, which is now displayed via the orange line chart farm, we are lagging CME just a bit. So we want to play catch up here. It's undervalued compared to CME. So we're going to go ahead and take a shot with long positions in CBOE. And we do that by buying call spreads, or selling out of the money put spreads, depending on your styles. Now, I'm going to be speaking at the Mad Hedge Traders and Investors Summit on August 24th through 26th. I believe my spot is on Monday the 24th at 2 p.m. Eastern, where I'm going to be talking about one of my favorite strategies for intraday and swing trading. You can click on the link at the end of the video to register. You can see all the speakers here. We've got a wide variety of folks, including ex-Trump advisor Anthony Scaramucci, where my mug is conveniently placed above his. So it's going to be a great session there. Register via the button at the end of the video. It's August 24th through 26th. Reach out if you have any questions, and we'll see you on the next update.